Hey there, it's John Humphries from Dominion Lending Center's Edge Financial. I just thought I'd do a quick recap of some of the big stories that happened in real estate and mortgages this week. So I've got a couple articles that I read that I thought I'd share, and I'm just going to share my screen here so we can both take a look at that. So the first one that came up was a article from the Huffington Post, which says Canadian house prices, housing inequality set to jump in wake of pandemic. So one thing is for certain is that detached prices, houses are in and apartments are out. We are seeing a very strong detached housing market, but I think what we're also seeing in apartments is there's more supply right now. But unfortunately, there is what we're finding is that all the good ones are going quick, and some of the ones that maybe were being eaten up with a higher demand are now maybe not being eaten up quite as quickly. So people are not snapping those up quite like they did, but people are looking at their four walls during the pandemic and thinking, I don't want to stay in this condo. I got to get out of here. Let's find something maybe outside the city. And so we're starting to see that start to spread out. People who were comfortable in the city before are maybe going a little bit further out. And those people that were looking at condos are now maybe thinking they want a house, maybe in the city. One of the things I noticed here is that buyers can afford 24% more house than they could just 2 years ago, thanks to falling mortgage rates. And that's actually not true. This is a quote that was done by one of the experts that they had. And it's actually, how that could be true is that if mortgage rates were tied to the qualification rate, and actually they're not. The qualification rate is tied to the bank's posted rates, which have not fallen in the same way that the bank's fixed and variable mortgage rates have changed. So if it were tied to that, then sure, we would see more affordability because people could afford more. But what we're not seeing is it's somewhere around so say if somebody makes $75,000, they've got a minimum down payment to purchase something. They could afford today, or 2 years ago, they could have afforded $364,000 worth of mortgage, give or take. Today, they're affording $383,000. So it's certainly not a 24% jump like this article says. But we are seeing a big housing boom right now for various reasons. Confidence is up. People are seeing that they don't want to live where they were before, and the prices are continuing to go up. But it's not because of the qualification rate. One of the other things I noticed tied to that is that the Kawartha regions, so people where maybe you're thinking, I want to buy a cottage, I want to get out of the city, their number of units sold in August this year is up 77.8% over sales recorded last year. And this is a really cool chart here. So not quite as high as what we saw in 2016, which was the last kind of run up to things in the real estate market, but a big, big jump from last year. So people are looking at their walls and thinking, I got to get the heck out of here. And that's one place that they're looking to go is in the Kawarthas. So I thought that was pretty cool. Toronto area apartment. So this is also further to the first article that we were looking at, where Toronto area apartment prices have risen nearly 80% in the last 5 years. So yes, we're seeing a little bit more supply. We're seeing some properties that maybe would have got snapped up before are sitting a little bit longer. But over the last 5 years, it's been a great investment if you've bought something 5 years ago. What it's not great for is maybe getting into the market. There's the prices have gone up a lot faster than people's incomes have gone up. So that's something to look at. And so maybe that's why we're seeing that. Now, actually, something else that they don't mention here, but I thought I'd mention is, we're seeing less tourism in Toronto, obviously. So there's less demand for short-term rentals, like on Airbnb, less rentals. So I think we're seeing people who are maybe sitting on that investment before thinking, I'm going to put my apartment or my condo up for sale rather than continue to rent it. And so I think that's part of the factor why we're seeing more supply on the market. Also a little bit less immigration, obviously. People aren't coming here as rapidly as they were last year due to the pandemic. So I think these are all sort of short-term things. Like there's a glut of supply right now, but there's not going to necessarily be, that's not going to be forever thing. When we get back, we're still going to have a shortage of supply, and we'll see those properties that were maybe sitting, they'll get eaten up eventually. or snapped up eventually. I don't know if anybody's still watching this, what they saw, but kind of something going on is a little bit of tension with CMHC and the rest of the real estate industry. So Remax is claiming that CMHC is fear mongering in the housing market forecast. They're still sticking by their prediction that prices in Canada are going to go down 9 to 18% year over year. I'm not, and that's a big number to be able to drop. That would be a historic drop. They're saying things like, well, when CERB runs out, people are going to have to sell their homes. There's going to be too much supply on the market. We're not seeing that here in Toronto. We're not seeing it in Vancouver either, from what I'm understanding. There are some softer markets, in the West. They're a lot softer there than they are in Ontario and Vancouver. But what we've seen in other years is that the juggernaut real estate industries of Toronto and Vancouver have buoyed the price for all of Canada because the housing prices are more expensive and they continue to go up. That the areas where the prices are not as high don't have as much of a 9 to 18% impact. Would be pretty unfortunate and obviously unfortunate, but it's not likely to affect on the national stage. So I don't know, leave me a comment below. Let me know what you think about that. If you found this helpful, leave me a comment, give me a like, and let me know what you think. Anyway, I'm Sean Humphries. If you have any questions on what I talked about, send me a note, and we'll look forward to chat with you soon. Talk to you next time.